In part B, we need to prepare the prior period error note for 31 December 20.18. As always, plan of action. My first step, guys, let's say for example, we're unsure, we do not know what to do. I will immediately open my IS8 index. On my index or contents page, I will identify the paragraphs that relate to errors and I will open this. Now this will be paragraph 41. Based on that, I will identify the years that I need to correct. What do I have to do? My second step, I will include my template. But before we look at the template, I want you to please refer to paragraph 41 and I'm going to work through this briefly with you. Errors, paragraph 41. I want you to look at the bold paragraph, paragraph 42. Again, bear with me, I'm going to read through this briefly. Subject to paragraph 43, an entity shall correct material prior period errors retrospectively in the first set of financial statements authorized for issue after their discovery by restating comparative amounts for the prior period presented in which the error occurred. Okay, so we need to perform our error note for 20.18. Now, when we look at comparative amounts, this will be for 20.17. This is our prior year. Then they indicate to us, B, if the error occurred before the earliest prior period presented, restating the opening balances of assets, liabilities, and equity, which is our retained earning for the earliest prior period presented. Now, what does this mean? Remember, we will have to now correct the earliest prior period, which is 20.16. But this will have an influence on our opening balance. Therefore, we need to correct our opening balance on the 1st of the 1st, 20.17 in terms of our statement of financial position account. Or line items, not accounts, guys. Okay, therefore we will have to correct our 20.17 year-end figures and we need to correct our 20.16 year-end figures, which will influence our opening balance on 20.17. Guys, when you read B, if the error occurred before the earliest prior period, which is 20.17, restating the opening balances of assets, liabilities, and equity. Therefore, statement of financial position. Then you can look at your disclosure. We need to disclose the nature, what happened, where, how. For each prior period presented, to the extent practical, the amount of the correction for each financial statement line item. Therefore, for your profit and loss and for your statement of financial position, the amount of the correction at the beginning of the earliest prior period presented, this will be statement of financial position amount. And then D, if it is impracticable, you need to explain why. Now, in terms of our steps, we know what to do. IS8. We need to correct 20.17. We need to correct our opening balance, 20.17. We are now able to include a template. Now, guys, I know at this point of time, your template is practically clean. I'm going to indicate on a new page to my marker that this is my part B. I am only going to include a heading, prior period error, because at this point of time, I will have to read through the information again to be able to complete this. But what I want you to identify in this note is that there's 3 important sections. Section number 1 is your description. What happened, when, and how are we going to correct this? Therefore, you need to indicate, in terms of IS8, remember when you look at this, paragraph 42, you need to indicate that we will have to correct this retrospectively, and you need to write that word down. Okay? How are we going to correct it? Retrospectively. Then, number 2, you will have to identify that you will have to include your profit and loss line items. Number 3, your statement of financial position line items. Now, this is pretty straightforward, guys. They've indicated to us in the given scenario, in terms of profit or loss, that they've recognized depreciation to cost of sales. In terms of statement of financial position, that they have still included this in our PPE. So we know that these 2 line items should be corrected. And then, guys, another one that I want you to add here, number 4. You already know your period. You know you will have to correct 20.17 comparative figures, and you need to correct 1st of January 20.17. And this, guys, only for your statement of financial position line items. You do not include your profit and loss line items. Why not? Because your profit and loss total will be recognized in your retained earnings, your equity, which is your assets minus your liabilities. Okay, therefore, we have completed step 1, step 2. Step number 3, we need to work through the information. We need to identify what happened, what was recognized, and what should have been recognized. We need to calculate the effect on our profit and loss line items, on our statement of financial position line items, and extremely important, don't forget this, guys, the tax effect. They've indicated to us that they've opened our tax liability for that year. Therefore, we need to correct this. And then the very important step, once you have completed your calculations, you need to remember to transfer this to your template. If you do not transfer your calculations, they're not going to mark your calculations. The requirement states that you need to prepare the note. Now let's look at the information provided. Before we look at our given information, I've drafted a timeline. I want to work through this. I want to ensure that you understand exactly what we need to do. Now, when you look at our timeline, remember we need to include the note for 31 December 20.18. The criteria was met on 31 December 20.16. Now, guys, we have identified that we need to include our comparative figures details, which is 31 December 20.17, and we need to include the opening balance for 20.17 only in terms of our statement of financial position. Now, they've indicated to us on 31 December 20.16 the criteria was met for our IFRS 5 asset. Therefore, we need to recognize this at the lower of carrying amount or fair value less cost to sell. Now, when you look at the left side of your screen, you need to decide upfront, are you first going to focus on your profit or loss line items, or are you first going to focus on your statement of financial position line items? My personal opinion, I will focus on my statement of financial position, and as I do this, I will identify if there is amounts that has an effect on my P&L, and I will indicate that on my calculations. Okay, then I normally include a table. Now, guys, it doesn't have to be this neat. Include a heading, was, should be, that's it, and include your calculations according to your heading, your table. Now, you will identify I've included was, should be, and I have indicated to you that I'm going to start with my statement of financial position line items. Okay, now at the end of 20.16, they have indicated to us, when you look at the given information, they've indicated to us, guys, in the PPE note, included in machinery is a sewing machine with a carrying amount of 2250. Remember, this relates to your 20.17 amount, and 2550 in terms of 20.16, which is incorrect. We need to take this out. Therefore, in my was column, I know for 20.16 that they've got PPE plus at an amount of 2550000. Okay, now guys, I just quickly want to take out the circle here. This is going to confuse us. Okay, then I know at the end of 20.16, when I transfer my PPE to IFRS 5 at the lower of carrying amount, fair value less cost to sell, they've indicated to me in the given scenario that my fair value is 2260. It remained unchanged. But a very important thing that I have to identify, the costs to sell, guys, is this 60,000. But we need to determine the present value. Why? Clues. Clue number 1. They've indicated to us that it was anticipated that the machine would be disposed of for cash by 30 June 20.18. They've met the criteria to extend this. Clue number 2. They've provided us with a discount rate, 12%. Therefore, we need to calculate the present value of that 60,000. Now, guys, in a scenario when they provide you with a cost to sell, 60,000, no details in terms of discount rate, no details in terms of a payment in the following year, you can assume that you can use that amount. Why? Because they expect to dispose of that asset within the next 12 months. But in this question, we need to determine the present value. Now, we know our fair value, 2260,000, and we have a future value of 60,000. Our period is 18 months. My interest rate, 12%. But guys, remember, I have a shop. Therefore, my interest and my period should both be in months. And therefore, I have a present value, 50,161. We need to deduct this. And my fair value less cost to sell will be an amount of 2209,839. Now this is my non-current asset held for sale. Therefore, when you look at 20.16, there should have been a line item non-current asset held for sale to the value of 2209,839. Okay, now very important, guys. You need to remember when you have a value in a present value, for example, this 50,161, that there will be interest. Remember, there will be interest recognized for 20.17. Now, I use my shop. Therefore, on my shop, I will indicate 1 amort. And my interest for that period will be an amount of 6362. This is an expense. Therefore, debit our interest expense in our profit and loss. Now, important to me, guys, I've identified profit and loss. This will have an influence on my profit and loss. And I need to remember, as I think about this, guys, that I have depreciation recognized, also profit and loss that I need to correct. But I'm going to leave this. I'm focusing on my statement of financial position for now. Now, at the end of 31 December 20.17, remember, our non-current asset held for sale should be recognized at fair value less cost to sell. Therefore, when you look at this, guys, do you agree with me? 2260,000 minus our cost to sell. Now, our cost to sell will now be the 50,161 plus our interest. And our cost to sell will now be an amount of 56,523. Therefore, our fair value less cost to sell will be 2203,477. Okay, this is also important to us, guys. Okay, in my table, 20.17. 20.17, our PPE included an amount of 2250,000. Incorrect. Therefore, guys, let's include this. Our PPE had the amount of 2250,000, and our non-current asset held for sale should have been this 2203,477. Just quickly want to highlight these amounts for you guys. Okay, now guys, remember we're focusing statement of financial position. We need to look at our tax implication. Back to basics. Our tax implication, your carrying amount, your tax base, your temporary difference, and your deferred tax. Now for 20.16, we have our PPE. Again guys, you need to look at this. What was, let me just quickly take this out, this PPE. I'm going to indicate to you was and what should be. Okay, was, they had carrying amount of 255,000,000. Abbreviation indicates your marker, the meaning of this. Tax base, guys, in the given scenario, they've indicated to us when you look at the working papers. Our tax base at the end of 20.16 was 1,980,000. 1,980,000. Therefore, our temporary difference, 570,000. Deferred tax asset or liability, guys. The assets carrying amount exceeds the tax base, therefore deferred tax liability, 159,600. Should be 220,939, which is the non-current asset held for sale. The tax base remains the same, and our temporary difference will be the 229,839. Deferred tax liability, carrying amount exceeds the tax base, and this is 64355. Now immediately we are able to identify for 20.16, we will have to decrease our deferred tax liability from 159,600 to 64355. Therefore, we need to recognize a decrease in our deferred tax liability of 95,245. Now for 20.17. Again, guys, what was? We had an amount of 225,000. Our tax base provided to us is this 147,000. 147,000. Our temporary difference, 780,000. Our deferred tax, 218,400. Deferred tax liability. Guys, I'm pretty sure you know this, or I really do hope so. Hey? Okay, then it should be this 220,377, and now this is the important one in terms of tax, guys. What is tax base? The tax base will be the 1,980,000. Do you see, guys? This is the tax base on the date when we met our IFRS criteria. And our temporary difference will be 223,477. Deferred tax liability, 62,574. Therefore, a decrease in our deferred tax liability from the 218,400 to the 62,574, and this will be a decreased deferred tax liability to the amount 155,826. Great. Okay, guys, now when you look at this, we have completed our statement of financial position, was, should be. We need to now look at our profit and loss.